All right, ready to dive into the world of Warren Buffett.
Let's do it.
We've got excerpts from the Warren Buffett Way. Going to try to break down his investment strategy today.
Sounds good.
And the goal is, can these legendary principles work for the average person?
Yeah, that's the interesting part, right?
Even if you're not, like, buying entire companies.
Exactly. That's the beauty of studying someone like Buffett, though,
Yeah.
It's all about those timeless principles,
Yeah.
not just like fleeting tactics or whatever.
Okay, so the book starts with this quote.
Oh, yeah.
I buy businesses, not stocks.
Yeah, a classic.
And businesses he'd own forever, no less.
Yeah.
So what's the deeper meaning there?
Well, it's a total mindset shift. I think,
Yeah.
most people look at stocks as tickers on a screen
Right.
going up, down, whatever. But Buffett, he sees them as ownership in real companies,
Oh, interesting.
with products, employees, and that long-term potential.
So it's all about looking past the daily stock market, like craziness,
Yeah, all the drama.
to see the bigger picture.
Exactly. And that leads to another core concept, intrinsic value.
Okay, I've heard that term before, but
Yeah.
what does that actually mean in, like, practical terms?
So Buffett, he's not swayed by the hyper short-term fluctuations.
Mhm.
It's laser focus on what a business is truly worth
Okay.
based on its assets, its earnings power,
Yeah.
future prospects, all that.
That sounds really difficult to figure out, though,
It's not easy.
especially for someone who's not, like, a financial whiz.
Right. It's not a quick calculation for sure.
Yeah.
But the principle is really important. Understand the value,
Right.
not just the current price tag.
The book mentions a few big names that influenced Buffett,
Oh, yeah. Some investing giants.
like Benjamin Graham,
Of course.
Philip Fisher,
Mm-hmm.
John Burr Williams.
Yeah, they were all big influences.
So where did their ideas kind of fit into this Buffett way?
They're like the foundation, really.
Okay,
So Graham, who's known for his book, The Intelligent Investor,
I've heard of that.
emphasized this idea of the margin of safety,
Okay,
which means buying assets for way less than their intrinsic value.
because you've got like a cushion.
Exactly, a cushion for any unforeseen risks.
Okay, smart.
Think of it like buying $1 for 50 cents.
Right.
That's margin of safety in action.
Makes sense. What about Fisher, though?
Fisher was all about the qualitative side of a business,
Okay.
the management, the competitive landscape,
Mm.
long-term potential.
Yeah.
He believed in research, talking to customers, really getting it.
Okay, so like digging deep.
Deep dive.
Interesting.
Yeah.
Okay, and then John Burr Williams, his work seems a little more,
Technical.
yeah.
It is, but super insightful.
Okay.
He pioneered the dividend discount model,
Oh, okay.
which basically uses a company's projected future dividends to estimate its present value.
So like looking into a crystal ball, trying to see the future earnings.
That's a great way to put it. You're trying to predict future earnings and then discount them back to today.
Okay, so it all ties back to that long-term vision.
It does.
Not just what the company's earning now, but what it could be earning years down the line.
Exactly. And these three ideas, that margin of safety,
Yeah?
the deep business understanding, and projecting that future value,
Right.
that's woven throughout Buffett's whole strategy.
The book then breaks down this strategy into 4 key areas or tenets, right?
Yes.
Business tenets, management tenets, financial tenets, and then value tenets.
Mm-hmm.
Let's start with the business tenets.
Okay.
What does Buffett actually look for when he's analyzing a company?
Well, first up, a consistent operating history.
Okay.
He wants companies that have been doing the same thing well for a long time.
So no, like chasing the latest trends or...
Not really.
Yeah.
Like, think Coca-Cola.
Right.
Selling syrup for over a century.
It's simple, yeah.
Understandable, profitable. That's what he wants.
Okay, got it. What's the second thing on the checklist?
Favorable long-term prospects.
Okay.
He wants companies with what he calls a moat.
A moat.
Yeah, a sustainable competitive advantage. Like, think about a company like Larson Jewell, a leader in picture framing.
Okay.
Their service, reputation, that's their moat.
Oh, so it's like protection.
Right, protection from competitors.
Interesting. And the third thing?
He avoids commodity businesses. Companies selling products with, like, little differentiation. Oil, sugar, that kind of thing.
Okay, so like generic cornflakes.
Yeah, exactly. Prices are driven by supply and demand, not much room for advantage.
Okay, these business tenets are pretty interesting.
Yeah.
But I mean, what about the people running those businesses?
That's where those management tenets come in.
Okay, so tell me, what makes a manager Buffett approved?
Well, he looks for 3 things. Mainly, rationality. candor,
Okay.
and then a resistance to what he calls the institutional imperative.
Okay, let's break those down.
Right.
Starting with rationality, what does that even look like?
Managers who are data-driven, not swayed by emotion or hype, decisions based on logic and evidence, not gut feelings.
Okay, that makes sense. I mean, I feel like a lot of business decisions.
Are emotional.
Yeah.
It happens. But that leads to candor.
Okay.
Buffett values honesty and transparency.
Right.
Leaders who are upfront with shareholders, even when things aren't perfect.
That's rare.
It is. A great example is his self-criticism about General Re.
That reinsurance company.
Yeah, he admitted he misjudged it and took responsibility for the losses.
Wow.
Okay, and lastly, resisting that institutional imperative.
What does that even mean?
It's the tendency for organizations and people in them to just follow the crowd,
Oh, interesting.
even when it's a bad decision.
I could see how that'd be dangerous.
It is, especially in investing where everyone's chasing the hot trend.
Yeah, like the dot-com bubble.
Exactly. Everyone pouring money into internet companies, regardless of anything.
Wow, okay.
So Buffett wants managers who can think independently,
Got it.
resist that pressure.
Be different.
Yeah, make those rational decisions.
Even if it means going against the grain.
Absolutely. That's what he admires.
Okay, so those tenets really give us an idea of the companies and leaders Buffett likes. But how do you actually analyze the numbers? Like, if you're not a financial expert, how do you make sense of all those financial statements?
Well, that's where those financial tenets come in. He's not just looking at, like, price to earnings ratios or anything.
Right.
He's digging deeper to see the real earning power.
Can you explain that in a way that, like, won't make my head explode?
Of course. One of the key things he uses is owner earnings.
Owner earnings. So
It's a way to measure the true profitability by focusing on the cash flow that's actually available to the owners.
So, like, how much money the business is actually making, not just what's on paper.
Exactly. Imagine you own a lemonade stand, right?
Okay.
Your net income might look good after expenses, but what about those hidden costs? Like the wear and tear on your pitcher or the fact that you're working for free.
So owner earnings take all that into account.
Yeah, it gives you a clearer picture of what's really going on.
Okay.
Another big one for Buffett is return on equity,
Okay.
which shows you how effectively management is using shareholder money.
So it's not just about making money.
Right.
It's about making money efficiently.
Exactly. And this all feeds into the value tenets,
Okay.
which is where he decides if a company is a good buy or not.
Right. So how does he decide what price to pay?
He uses something called discounted cash flow analysis.
Oh, that sounds complicated.
It can be, but imagine you're buying a machine
Okay.
and it'll generate money for 10 years. You want to make sure the price you pay reflects that future value.
So it's like calculating the present value of all that future income.
You got it. And then Buffett adds in that margin of safety
Oh, right. That cushion
to protect against risk.
makes sense. This is a pretty thorough approach. I'm just wondering how he even has time to analyze so many companies.
He's got a system for sure. But, this brings us to his portfolio management.
Oh, right. He's known for focus investing. But what does that actually look like?
He concentrates his investments in just a few companies that he knows really well.
Isn't diversification supposed to be, like, the golden rule?
It is what you usually hear, but Buffett sees it differently. Too much diversification can actually hurt your returns
Oh, interesting.
and make it harder to really understand your holdings.
Right.
It's like being a jack of all trades, master of none.
So focus on quality over quantity?
Exactly. He thinks by focusing on a few exceptional businesses,
Yeah.
he can beat the market over time.
Okay, but the market's always changing, right?
Yeah.
Surely he has to adjust sometimes.
You'd think so, but Buffett's incredibly patient.
Really?
His turnover rate is super low.
Meaning?
He buys and sells very rarely, often holds for years.
Wow, that's commitment.
It is. Totally different from that Wall Street mentality of always trying to time the next move.
So he's playing the long game.
Exactly. He only sells if the fundamentals change or if there's a much better opportunity.
So what are some of the companies he actually invests in? We know about Coca-Cola,
Right, that's a classic. But one that might surprise you is Geico.
the insurance company.
He started buying shares back in the 50s, eventually bought the whole thing.
Wow.
He clearly saw something in their model, that low-cost approach.
So it's a bet on a company that provides value.
That seems to be a trend. He likes well-managed, financially sound companies with a history of profits.
Any other examples?
Think about See's Candies. He bought that in '72, and it's been a cash cow ever since.
It really is. Everybody loves their chocolate.
It's a simple business, but it's profitable, loyal customers, a product people want all year.
Makes sense. What about those Mrs. B commercials?
Oh, the Nebraska Furniture Mart.
Yeah. Did he invest in that too?
He did. He was so impressed with Rose Blumkin, Mrs. B.
Yeah.
Her business smarts, her focus on the customer.
It's a huge company.
It is. Strong leadership, clear vision, and again, that focus on value, perfect for Berkshire.
It's cool to see his principles play out in the real world.
It is. It's like he's building this collection of companies
that are actually good.
Right. Not just profitable, but also well-run, aligned with his values.
Now, it's not just stocks, right? He's also done stuff with bonds.
He has, especially when he sees value in that margin of safety.
I wouldn't have thought of him as a bond guy.
He's always looking for undervalued assets, no matter what.
Any interesting examples come to mind?
Oh, yeah. Remember WPPSS?
WPPSS, that doesn't ring a bell.
The Washington Public Power Supply System. They issued bonds to build nuclear plants, but the project went way over budget. Tons of delays, plants were abandoned. It was the biggest municipal bond default in U.S. history.
Wow, how did Buffett get involved in that?
He saw opportunity in all the chaos. Prices of those bonds crashed, investors were panicking, but Buffett bought a ton of them.
Really? At a discount?
Huge discount. He was betting that even though the project failed, the bonds still had value.
So he went against everyone else?
He did. It was classic Buffett, finding value where others just saw risk.
And what happened?
It paid off big time. They reached a settlement. Buffett sold those bonds for a big profit.
So even with bonds, his value investing ideas work.
They do. He looks for those situations where fear creates mispricing, a chance to buy low.
Which leads to the psychology part.
Ah, yes, the mental game of investing.
We touched on that earlier, but tell me more about how he uses psychology.
Well, he understands the power of fear. When the market drops, most people panic and sell, right?
And that's what it seems like.
And that drives prices down even further.
Right, creates a downward spiral.
Exactly. But Buffett sees those moments as buying opportunities. He knows the market overreacts.
So he's buying when everyone else is selling.
Yep.
Taking advantage of the irrationality.
That takes some serious guts.
It does. He stays calm and rational while others are freaking out.
How does he do that? Avoid those tracks himself.
He's really good at detaching from the short-term noise, focuses on the long game.
The fundamentals.
Exactly.
Ah.
Another insight he uses is the importance of framing.
Framing? What do you mean? How information is presented can change how people see it.
Oh, that's interesting.
Like, think about his annual letters to shareholders.
Yeah.
They're not just boring numbers. He tells stories, uses analogies, explains things simply.
Makes it interesting.
It builds trust and confidence.
Right. His shareholders get it.
Exactly. They understand his vision.
It's like he's built a community.
It really is. He's not just an investor. He's a great communicator.
That makes a big difference.
It does. He gets it. The psychology, the power of a good story, all of it.
This deep dive's been, really eye-opening.
Yeah, it's fascinating stuff.
But I gotta ask, how much of this can actually work for someone who's not managing billions of dollars?
Yeah, good question.
Does the Buffett way work on a smaller scale?
I think it definitely can.
Okay, but how? How do you even start to think like Warren Buffett?
Well, the book has some pretty solid advice.
Right.
It starts with thinking like you own the business.
Right.
So first step, kind of a tough one, turn off the stock market.
Wait, what?
Not literally, of course.
Okay, good.
But mentally detach yourself from all those daily ups and downs. Yeah. The market's like this emotional roller coaster, swinging from greed to fear.
So resist the urge to check your portfolio every 5 minutes.
Exactly. Instead of obsessing over those stock prices, focus on understanding the businesses behind them.
Okay.
Dive into those financials, read those annual reports.
Really get to know them.
Become a mini expert, basically.
So it's like doing your due diligence.
Yeah.
Even if you're only buying a few shares, you're thinking like you're buying the whole thing.
That's the mindset.
Interesting.
What else? Buy a business, not a stock.
Okay.
Think long-term ownership. Ask yourself, would I own this company for 10, 20 years?
Wow. Okay.
If the answer is no,
yeah,
it's probably not a Buffett investment.
That's a good way to filter out those impulsive buys.
Right. Get rid of the hype. And here's another one. Might be a little surprising. Don't try to predict the economy.
Wait, really? Isn't that what most people do? Try to figure out where it's going?
It is, but Buffett thinks it's impossible.
Oh, wow.
No one can predict the future, especially the economy.
Yeah.
So instead of timing the market, Focus on companies that can thrive no matter what.
Okay.
Strong management, competitive advantages.
You can weather any storm.
Exactly. Find those resilient businesses.
And one last thing. I know we talked about focus investing,
Right.
but even Buffett doesn't put all his eggs in one basket, right?
He does manage a portfolio.
Okay.
So find a few great companies, ones you really believe in, that fit the criteria.
Yeah.
Then build a diversified portfolio around them.
Okay, so it's about balance.
Exactly. Conviction, but also being prudent.
This has been awesome.
It's fascinating stuff.
Really makes you think differently about investing.
It does, yeah.
It's not just about the numbers.
Right.
It's about understanding value, thinking long term.
And managing that risk.
So what is it about Buffett that makes him so successful?
His commitment to his principles, that's huge. His discipline and his curiosity. He's always learning, always adapting. A real role model.
He's a reminder that success isn't about getting rich quick.
No magic formula.
It's hard work, patience.
And sticking with it, even when things are tough.
Absolutely. Any final thoughts for our listeners?
Yeah, don't be afraid to be different. The Buffett way challenges the norms.
It does.
It encourages you to think for yourself, and that's what really matters.
That's a great message. Thank you for joining us on this deep dive into Warren Buffett's world.
It was my pleasure.
We'll be back next time with another deep dive into ideas that matter.